Welcome back, everybody. Hope you all are having a fantastic day today. Welcome to another Money Matters. We are going to be going through a very crazy news article here by Business Insider, pretty much stating that how the stock market, the economy, is doomed for another 2008 crash. We're going to be pulling it up for those of you that are new to the channel. My name is Carter. Guys, what we focus on this channel is very fun and exciting news and something just crazy so we can all stay up to date on cool things kind of going on with just the market or different technologies. So I hope you guys all enjoy that. If you guys do, like and subscribe literally right now. Do it. Like, subscribe. All right, but let's jump into this here. So the article here that I want to talk about is how the economy and stock market has never seen anything like this before, and how there is flashing signs of recession from a veteran strategist. So guys, I hope you guys all enjoy this. If you guys do, like, subscribe, and let's jump into this here. So obviously, one of the things that I just want to be completely upfront about when it comes with, people calling out crashes or a recession, guys, no one knows. Nobody can read the future. All they can do is look at previous data to see how it could affect the future. That's pretty much it. If you are clicking on this video to see when the next crash is, guys, nobody can read the future. There's analysts and experts that have been saying there's crashes, over the past 2-3 years. Every single week there's people saying that. So let's jump into this here. So, all right, going out of business, the front thing, putting fear into your eyes. I just want to show you guys that, making everything such a big deal. All right, so the U.S. economy and stock market are on a clear path to recession. Paul Dyrich, the P. Riley wealth strategist, pointed to a handful of warning signs that suggest a coming downturn. The final blow to the economy could be the U.S. pulling back on stimulus spending, he said. So let's see what's going on here. So there are a large number of warning signs for the U.S. that suggest the economy is nearly certain path to recession. B. Riley Wealth Management's chief investment strategist said. All right, Wall Street vet, who among the observers called the 2008 crash, has been warning for months of another downturn. So for months. So nobody knows when this is going to happen. He's been saying this for months. If he knew the exact time, he would say, hey, April 1st, 2025, expect a crash. Nobody knows. All they can do is look at data, look at indicators to determine certain things. Is the stock market due for a crash here? So let's see what he's saying here. So all right. In the recent note, he pointed to a cluster of warning signs in the economy, such as hotter than expected inflation throughout the first quarter and greater volatility in the market. So hotter than expected inflation, yes, that is something that could definitely stunt the economy, especially one of the things here that I do want to be completely upfront about. Last year, pretty much the Federal Reserve said expect some interest cuts for this next year, and we haven't seen that yet. So with the inflation being a little hotter than expected, this causes investors to say, well, I don't think we'll have lower rates, which honestly kind of fuels the economy. So this could definitely stunt it. Greater volatility in the market, I don't know about that one. Yes, we're seeing certain sectors perform well, like AI, like technology, but greater volatility, I'm not sure. Stocks and bonds have seen muted gains this spring. Okay, I don't know what stocks, but yes, bonds have seen some muted gains this spring. While oil and gold, which typically perform well in pretty much inflation times, are rising. So yes, that is true. Oil and gold perform well. That's why gas is expensive. That's why, for those of you that invest in metals during recessions, often perform well. All right. Economic growth is also starting to slow, with GDP rising 1.6 over the first quarter, down 3.4% in the final quarter of 2024. Yes, that could definitely stunt the economy, cause possible recession here. Consumer conflict is also plummeting. Dyrich, I don't even know how to say his name. While job growth has slowed, with the unemployment rate recently touching its highest level in 2 years. So this is what kind of does concern me. We are seeing a variety of different things here when it comes with the market. One thing doesn't just cause the stock market to crash or a recession. Often it's a variety of different things that cause it. So yes, this is definitely going to poke fire. This could give it a little more flame here. Meanwhile, yields on the U.S. Treasury are nearly 4 times the yield of the S&P dividend. So now what you'll see a lot of investors start doing is start putting money into treasuries rather than dividends. Now, the reason why people do this is obviously to make money. That's why we all do it. People are going to seek out the best opportunity, and if treasuries are paying 4 times better yield, you'll see money get put there rather than the S&P, which when you don't have money getting put in the S&P, often it will cause sell-off. So a sign investors are I can't say that word. Incipitate. Don't bash me, guys. And I'm anticipating, there we go, interest rates to stay higher for longer. That's the highest treasury yield have been since 2021. Only the second time in the past 100 years that yields have been that high. So yes, we are seeing a variety of different things here that could possibly cause a stock market crash here. All right. One thing that I do want to bring up before we end it here is this little quote here. The economy and the stock market have never seen anything like this in history. Everything reminds me of the dot-com bubble in 2021, or not 2021, 2001, 2002. So we've never seen this before, but it reminds me of this. So I don't know. It's kind of just funny to think about, like, he's saying, oh, we've never seen this before, but yeah, it reminds me of the dot-com bubble. I think that's a very, very fair thing to say, just to be completely honest, because we are seeing a whole bunch of AI stocks that are, in my opinion, probably borderline worthless, squeezing up, 10 to 100% in value just because NVIDIA is up that much, and so everybody's looking for that next NVIDIA stock. But so yes, he's pretty much thinking that there could be definitely a next recession. But that's why here. I do think another thing to bring up, and honestly, I think we could possibly see a recession. But this is another thing here. Dyrich is among the most bearish forecasters this year, even as calls for a recession have eased, and observers say a coming downturn is likely to be short-lived. Previous Dyrich, I don't know how to say his name, said stocks could crash as much as 44%. I don't know where he's getting this number from. I would love to know. As the U.S. economy weakened, even if the recession turned out to be mild. So it's just a bunch of talk. Honestly, yes, we're seeing high interest rates. We all know that. Everybody that invests into the market right now knows we have high interest rates. The only thing that does concern me is conflict overseas, the high oil prices. I hope we see some sort of good news with inflation reports, as well as good news with unemployment. I do think those things could possibly cause I don't even want to say a recession, but some sort of correction. And the difference between a crash and a correction is a crash is, when the stock market sells off 20%, correction is 10%. I do think a 10% sell-off could be normal. It could be healthy, and it's probably long overdue. On average, we see a correction about every 2 years and a crash every 4 to 6. So yeah, we haven't seen a good beatdown in a minute, but honestly, does that change investment planning? Absolutely not, because you can just buy into these buy into these stocks at just cheaper prices. So, this does not concern me. A lot, they're putting fear into the market, and I don't know. It's almost like people like this are pumping this stuff out, and they're shorting the market, hoping it scares people. And I don't want people to be scared when it comes with investing. I want you guys to understand, if something does happen, which it could, we know it could, just buy more, buy dips. Over the past 90 years, through all the ups, through all the downs, through the Great Depression, .com bubble, it's had an average return rate. The S&P has had an average return rate of 10%. So, guys, stick to your guns. Invest for the long run, and you'll be all right. So, guys, hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next. Hope you guys enjoy this because it is fun to look at. Take care, guys.